How you doing, everyone? Welcome to another episode of Coffee with Colin. Ooh, look, I've got some coffee all over my mug here. Yes, it is Monday, and it is time for another inspiring episode here. Tonight, we are going to be further creating more awareness and insight and empowerment around the conversation of money. Now, there's three things that most people advise you not to talk about: money, politics, and religion. And I talk about all three because a lot of this stuff is so important that we do talk about it, because when we don't talk about things, we go into life and we make decisions that are uninformed. And this has been part of my path over the past few years, where I've really been diving deep into creating more financial awareness and learning what are good investments, what are bad investments. I've been investing in real estate now for over the past 7 years. And tonight's guest has been a financial advisor for over 30 years. He's the chairman and CEO of Berkshire Advisors, and he's also written a couple of books. And I am actually doing the audio book for one of them. We share the same publisher, Melissa Wilson. And his first book, Messages from the Money Masters, is available on Amazon and where all books are sold. And in this book, he interviews a bunch of very successful advisors who've been in the space, such as real estate and investments in the stock market. Susie Orman, Warren Buffett, you name it. He's interviewed a bunch of really top financial advisors in there, and very successful people in the financial world. And then his next book, 33 Ways Not to Screw Up Your Financial Life, is the book that I'm currently doing the audiobook for. So this is available now on Amazon, and I'm going to be doing, we're going to be launching the audiobook version of this very soon. But wanted to have him jump on here tonight so he could share with you how he got started as a financial advisor and give you some insights and some tips and some strategies on how to create financial abundance and awareness for yourself, so that we are able to create more abundance and all that great stuff in our lives. Because again, if we don't know the information, if we don't know how to make these decisions, a lot of the times we can be paralyzed and we are afraid of the future if we don't know what it looks like. So this is why I'm really excited to have him on tonight's show to share with you some insight and some knowledge around money and financial awareness. So without further ado, ladies and gentlemen, please welcome to the stage, Mr. Jay Kemmerer. How you doing,
Hey.
Jay?
Hi, Colin. How are you?
Good to see you. I'm doing great, thanks.
Good to see you as well. Thank you so much for having me on the show tonight. It's been quite a pleasure. I've been looking forward to it for probably well over a month.
Yeah.
So it's great to join you tonight.
Yeah, well, it's been an absolute pleasure to read your book. And as I've been doing this audiobook, I've been picking up and rereading about some tips and strategies that you kind of hear about in the news, and you pick up little different tips here and there. And just want to start out by asking, what is it about financial awareness and investing that attracted you to it? How did you get started in it? And where did your path begin?
Well, I was born in a small town outside of Reading, Pennsylvania. My father worked 2 jobs his whole life, and I learned at a very young age that working hard can get you only so far. That education around money and things like that were really, really going to be the most important thing you could do. And so at a very young age, I started investing in the stock market. I was like 18. And so I always had an interest in that, because coming from a family of 5, we never went hungry at night, but we never had all the luxuries and things that maybe some of the, other families might have had. And so I took a real strong interest at a young age, because I always wanted to feel that I was working towards being more financially independent. Mm-hmm. So at the age of 25, after working at some dead-end jobs, I answered an ad in the local paper, and it was for a manager trainee for an investment company called First Investors out of New York. And they were hiring investment management trainees. And what really inspired me about that position was that they were going to teach me to teach other people how to become financially independent and hopefully wealthier than if they didn't have the training and education that we were going to give them. And so that's kind of how it all started. And so here we are 30 plus years later. And needless to say, it's been a great journey.
So you'd say it was born out of your desire to just growing up in that type of household, watching your father work really hard. And I think we all know people who work really hard. And, that expression, trading hours for dollars, is something where people are really trying to escape from. It's I know some people who have 3 jobs. I currently have like 12 jobs because I'm doing so much. But in terms of creating this financial awareness, what would you say is a good place to start for someone who has maybe a 9-to-5 job and who is looking to plan for the future? Because I think a lot of people get a 9-to-5 job, and if you're lucky enough to have a 401k or a pension or something like that, people sock away money in that 401k and then just kind of hope and pray that by the time they retire, they have enough money in there. It sounds like that's not what you wanted your financial future to look like. Is that accurate, and why you really got into this world?
I would say yes. I mean, I was tired of getting hand-me-down clothes as a child. Never had my own bike. I had hand-me-down bikes.
Mm-hmm.
And I just knew from watching my father work so hard that it can only take you so far. And so I've always had this entrepreneurial spirit, and I always wanted to be able to drive to my own destiny. And just working a 9-to-5 job doesn't guarantee that. And some people do. Some people land some very nice careers, and they do save money. But it goes a lot further than that. You really need to dive deeper and know some of the basics. I mean, you might have a 401k, but you might not invest it properly, or you might make the wrong decisions at the wrong time. And so that can hurt you too. There's a calculation out there. I think Vanguard actually did it that shows that the average investor earns less than what the average market performs over a long period of time, because they're always in and out of the market at the wrong time. And if you miss the 1 or 2 days of the market being up each year, you miss a lot of the return that you would get. So it's more than just having a good retirement plan in place. You need to know how to manage that plan also.
Yeah, because there's a lot of companies out there like E-Trade where you can just jump in there and start buying and selling stocks on your own. But I mean, as you mentioned, there's so many ways to invest money. I would always just think that the experts are the ones that obviously are studying the markets every day and have a better pulse on what are some of the best stocks to invest in. Would you say that just basically like what you just touched on, people jumping in and buying stocks maybe because they have an emotional reaction to seeing Elon Musk talk about electric cars and what they're kind of hearing on the street, and then they buy it and then it'll go down and then they sell, and this emotional type of buying and selling. You talk in your book about emotions regarding money and not making decisions based on these emotions. Tell us a little bit about why emotional investing and jumping in and jumping out is a bad idea, and why using someone like you, who is a fiduciary, whose job is to advise the client, which is different from a financial advisor, correct?
Well, I always break it down. A fiduciary has an obligation to always do what's right for the client, ahead of their own interest. And, for years, advisors were commission driven. And so there was a conflict there that, well, if I put you in one product, I get paid more than just a flat fee making sure you're doing the right thing at all times for the client. So the commission salesperson, that was one way people used to engage an advisor. Today, the majority of people are engaging fiduciaries because of that higher standard, if you will. Talking about the emotions, Warren Buffett coined a phrase back in 2008. He said that, let me think about it now. Be fearful when everyone is greedy, and be greedy when everyone is fearful. So what that's taught me over the years is simply that don't try and make emotional decisions. Don't chase the hot market cycle, whatever it is. Maybe it's real estate, maybe it's the stock market. Be careful and make sure that you don't get emotional about things. You might say to yourself, why are people paying $50,000 more to buy a home today? Because that's what people are doing. Well, does that make it right? Does it make it that it's going to be too expensive of a financial decision? So be careful. Don't get greedy. Don't be greedy when everyone else is greedy. You need to be fearful when those things occur, when people are chasing market.
Or just call you.
Or they could just call me and I'll try and talk them into, advise them and give them the right sense of how they should proceed.
Yeah. So in doing your audiobook here, 33 Ways Not to Screw Up Your Financial Life, you do have a quote from Henry Ford here on one of the first pages. It says, if money is your hope for independence, you will never have it. The only real security that a man will have in this world is a reserve of knowledge, experience, and ability. And I really like that because a lot of people do end up chasing things just for the money. And that never ends well, because as soon as you do get the money, really what money does, and what I've discovered just from meeting people who have a ton of it and having had, successes in my life where with acting, you get paid handsomely for a job, but then you may not work for 5 or 6 years. So you got to really balance out how to manage money. And that's where I've been on my path to learn how to create some mastery around money. But in terms of, if you're just seeking something for the money and for the financial reward, ultimately it never quite works out, because even when you make a ton of money, what money does is, what I found is that it makes you, or amplifies more of who you are, what your personality is. And so if you're a happy person and you get more money, you're going to be more happy and create more abundance. Where if you're miserable and think, well, if I just had more money, my life would be so much better, I promise you, the more money you have, you will find something to be miserable about. Do you find that with your clients?
I do. There are some clients that, just like you said, you would think that they would have not a care in the world. They would be happy-go-lucky and just enjoying life each and every day. But you find that they have more problems and they're not happy on a day-to-day basis. So money can't make you happy. It can help take the edges off of life. But when you have so much that you just can't appreciate it anymore, because you have so many the family dynamics are so interesting, as you've probably have found out. Mm-hmm. Life should be about balance. Yes, we need money, but it shouldn't be, the love of your life. Achieving success is one thing. I always tell people it's not about the arrival point. It's about the journey. And too many times, I think people with a lot of wealth feel that they've already hit the arrival point and there's nothing worth journeying about anymore. And they get complacent, and then they get bogged down with so many other issues. And it's unfortunate.
Yeah. Feel free, everyone out there who's listening here, if you have a question you'd like to ask Jay, just type it in the chat. One of our questions is from Justin Kemmerer. He's asking, when is the best time to buy a house?
Wow. Well, when's the best time? Well, right now, the housing market, I always say it depends. It depends. It really depends on your particular situation. It really depends. Depends on your age. Is it your first time home? How
Mhm.
are you going to buy it? Do you have to overpay for it? Like right now, I have a realtor, a good friend of mine sends me real estate updates, and he said this one couple has lost 8 homes in a row that they did not get the bid. And the last one, there was no contingencies, and they offered $50,000 more for this single family home in
Yeah.
around the Coatesville area. Um, I would say it depends. Don't pay up for an asset that that you could lose money on in the next 12 to 24 months, unless
Mhm.
you plan to live there forever and it doesn't matter on the
Mhm.
price. So a lot depends on the situation.
And as far as your career, Jay, what would you say are some of the challenges that you've faced along the way? Because a lot of what I like to talk about on the show is things that you've personally overcome, some challenges that you've been faced with, and then maybe if you could touch on some challenges that you see some of your clients facing with regards to money and how you are able to help them out.
Well, I would say that most of my clients, some of the challenges they face is when they're going through maybe the first stock market pullback or the first recessionary event as they're working with an advisor and they've saved some money. Those are challenging times for them. And I usually find that when we can get them over that first recession or that a couple of those market pullbacks, they become better educated on understanding that the markets are going to go up and down over time, but historically they tend to go higher. So
Mhm.
you need to just be patient. Uh, so many of those times. I remember back in 1987, I was in the business 3 years, and Black Monday occurred, which is known for one of the biggest one-day downturns in the market. It was down 22% that day. And that wasn't the first upsetting news I ever got in my career. You could go on to the housing crisis, the savings and loan crisis. The Great Recession was another difficult period for so many people. And matter of fact, it was during the Great Recession that I started writing the messages from the Money Masters, just because I saw so many things that people were experiencing. And I wanted to write about how do we get through this? How do we
Mhm.
come out on the other side? And how do we come out being, I'll say, victorious versus feeling like a victim, of our circumstances. So a lot of challenges, but you do learn to get through them, and you definitely learn how to get your clients through them also.
And what would you say are some of the challenges that you've overcome in your career?
Well, I would say that every one of those recessionary events, I mean, the Great Recession of '08 and '09, I saw my income drop by 54%. And I really was feeling, I thought, boy, after 25 years in the business, I've seen everything. I know how to get over and help my clients overcome. And that was a real eye opener for me. That was really difficult. I remember telling my wife, we might as well stay a little longer. We took a few days off for my birthday. I remember telling her, opening the Wall Street Journal, and it said, the Dow's probably going to hit 5,000. And that was in March of 2009. And I said, if this keeps falling, I'm not going to have an income to go back to. I won't have an office. And that was a real eye opener for me. That was a very challenging time. But we got through it and we rebuilt, and you become smarter. You find a way to get through. And but there were times when I didn't think we were going to be able to get through it. I didn't know what was going to happen. So
So the conversations that you were having with your wife during these downtimes, because I think this finances and money really can have an effect on people's personal relationships.
mhm.
Uh, how did you personally get it through it with your wife? Because money can create a lot of anxiety, a lot of stress. Did you uh, did you just double down and just try to just keep looking for good investments during that time? Did you start educating yourself more on different kinds of investments? physically? Did you go to the gym, do any meditation to deal with the stress? Like, what did that look like?
Um, I think I started paying attention to Joel Osteen quite a bit. I
Mhm.
started to listen to his words of wisdom, and that every that there's opportunity. In the midst of the valley, there's going to be an opportunity, and you just have
Mhm.
to you got to be willing to get through that valley, if you will. But my wife and I talked about retiring. Instead of retiring in Southwest Florida, as we had bought some property there, we started talking about maybe we have to retire in Nicaragua or some other country, because I was reading that, for 2,000 a month you can live like a king in this country or that country. So we really had a lot of heart-to-heart talks about, hey, maybe we have to downsize, maybe we have
Mhm.
to cut back here or there. So it was a very challenging time, very challenging time. But yeah, as far as investments, one thing we did do is I kept investing each month, because I realized that when there's volatility, markets are priced cheaper than what they were the year before, the year before. So just like someone saving their 401k, don't stop saving if the market's down.
Mhm.
Keep putting your money in, rebalance. You got to rebalance your risk. Make sure you're at the right risk level for the situation, and just keep going, which is what we did. And everybody that stayed and diversified through that market of 08, 09, the market was at 6,500. Now look where the Dow is, look where the
Mhm.
S&P is. So the lesson there is, if you did go to the sideline, you needed to know when to get back in, Colin. And if you don't know when to get back in, you probably shouldn't get out, because you need to have both strategies. The before I'm
Mhm.
getting out, and this is the timeline I'm going to get back in. Anyway, that's how we managed it. And yes, I worked out a lot. I have a gym at my home, and every morning I was down there probably 5 days a week.
Yeah. Yeah. So each chapter of your book is another tip on how to not screw up your financial life. So, for instance, chapter 1 is giving the IRS or Uncle Sam an interest-free loan each year. Chapter 2 is waiting to start saving for retirement. Of all the 33 chapters, what would you say is your favorite?
Well, I like all 33, to be honest, but my favorite is chapter 1, mainly because so many Americans get a fat tax refund check back, and they just miss that opportunity to get that money working for them through their lifetime.
Yeah, you said the average IRS tax return check back to Americans is $2,900, right?
Yeah.
So they're
Yes.
holding on to people's money. They're earning interest on it when we should be earning interest on that money.
Absolutely. Absolutely.
So what's your advice with regards to that?
Seek out some advice from a good tax person, and try and reduce that if you can. You could add $200 or $250 a month to your budget, at which point you could start maybe saving a little for retirement, saving for an emergency fund that most people don't have today. And then maybe a medium-term goal is to put a little more money aside for a home, or maybe even a second home. Some of my clients that I've counseled were getting $9,000 a year back. I had one client, when I shared the story about my $9,000 a year client, he said, "Jay, I got 24,000 back last year." And I
Wow.
said, and he's a business owner, and they miscalculated significantly on what he put away and the earnings for
Mhm.
that year. So you have to stay on top of it. If you're an entrepreneur, you don't want to owe the IRS 10 grand or 20 grand, but you certainly can fine tune it and at least minimize those big IRS, checks that you get back.
So obviously working with a really good tax advisor and you're able to help people with that too, maybe help with recommendations. I know you can't necessarily do it here on the show. It violates, is it FTC laws with regards to advertising and that sort of thing? Is that when it comes to
It's
talking about this stuff?
well,
Public forum?
FINRA, yeah, FINRA. There's FINRA and the SEC. The
SEC,
Securities
okay.
Exchange Commission has rules against. We can't practice tax. We can't practice tax law unless we're certified as a CPA or an accountant.
Mhm.
So we try and tee clients up with those right tax people that can help them with that. And yeah.
So for the average person out there, let's say they are now in a position where they're just going to start or have been investing for a little bit, even if someone only has like maybe a couple $100 a month to invest, what would you advise them to do? Would you advise them to do a mixture of stocks, bonds, real estate? Like, how would you, like, people can start getting into real estate with real estate investment trusts where it doesn't require a whole lot of money. It's not like you're actually buying your own physical asset. It's more so you're investing into a fund that invests in real estate. So what would you say for someone who's just maybe got even if it's $100 a month, where would you advise people to start?
Well, what I refer to in my messages from the Money Masters is I tell everyone they should execute a SNL, what I call the SNL strategy for their money. And the SNL strategy is simply you need 3 buckets: short term, not so short term, and long term money. So if they have $200-300 extra a month, we need to determine how much should go to each of those buckets. As far as investing, if you're going to invest for the long term, we do a risk analysis for people to determine is the real estate trust the right place for them to direct that $100 or whatever it is. Is there another asset class that they should be looking at? So we try and diversify it across large cap, small cap, mid cap, growth, and value. And then within that, you'll have things like real estate, perhaps, and other items that you can balance out in there. So it's a real diversification approach. It really is. I try not to get too. I love real estate, by the way, and I think I bought my first real estate property. I was 25 years old, and it was a 4-family unit. I lived in one and lived rent-free and rented the other 3. And, that was my start into real estate. So it depends on what a person is, comfortable with as to, and their risk and their timeline, time horizon.
Heather Huff is asking, would you say the safest investment for the average person would be to start with index funds? And she's also asking, investing through a Roth IRA, for example.
Well, there are benefits to investing in index funds. I know Warren Buffett talks a lot about, if you don't know a lot about investing, that an index type fund is the way to go, because you can get diversification and you're not trying to figure out what you should be buying and when. You just basically put your money in on a monthly basis, and that kind of takes care of itself. And the Roth is, the Roth has some great tax advantages to it. I would say, once again, talk to a fiduciary, talk to an advisor to find out, is the Roth the best place for you, or would a traditional IRA be better, or should you be taking advantage of the 401k plan if that's available? But there's pros and cons to each one that you would invest in, whether it be the Roth or the taxable IRA.
Okay. So basically, just give Jay a call, ladies and gentlemen.
Well, you can, what, if you don't want to call, I wanted to throw this out. You can look up, you can go to a site, it's called findyourindependengadvisor.com. And if you punch in your zip code, it will share with you like 5 or 10 of the advisors within your region. And you can go and call 2 or 3 of them and see who you feel the most comfortable with and who is going to be able to help you based on where you are right now with your situation. So,
And sorry, what was that URL again?
findyourindependengadvisor.com.
Findyourindependengadvisor.com.
And these advisors are all going to be registered investment advisors / fiduciaries. So
Okay.
no commissioned people for the most part. It's all fiduciaries.
Awesome. And I would highly recommend everyone go and grab Jay's book. Even in the first chapter, you mentioned a great place to go to just to even see how much. So the IRS actually provides a free calculator to help you determine how much you're going to be getting back in taxes. Is that right?
I believe that is the site we outlined in the book. Yes.
Yeah. So you just get the book or wait till the audio version comes out and you can find out some of these tips and strategies. But tell us, how did this book, 33 Ways Not to Screw Up Your Financial Life, come about?
Well, I was after the first book. I mean, obviously, we know we both share the same publisher, Melissa Wilson of Networlding Publishing. She had called me and said, "Hey, I'm coming out. I want to come out with a series, and it's going to be a series of short books with various authors." And she asked me if I would like to do one relating to financial mistakes, and she at that time said, "I believe the books are going to be called 33 Ways Not to Screw Up Your something," right?
Mm-hmm.
Mine was financial. There's three others that were written by three women entrepreneurs. One is Dr. Marge Johnson, Saudia Davis, and Ann Janzer. And if you go to Amazon and punch in 33 Ways Not to Screw Up, you'll see the other three books there. But she brought that to me, and I said, "Yeah, I'd love to do it." The most difficult part was trying to keep it to 33, because I'm sure, Colin, you and I could probably come up with another 100 each of other things.
Yeah.
And maybe that'll be a second book, right?
Yeah.
Who knows?
And how would you say the average person can become financially independent?
Well, I remember a quote that Ben Franklin made, and it basically says that people don't plan to fail, they fail to plan. By failing to plan, they have a tendency to fail. So I would say, the first step is, you really have to have goals. You have to set some goals, and you have to be willing to want to change your situation, because, and then be willing to move ahead and make some changes. So it's going to take a commitment to change your mindset. It's going to take a commitment for you to learn and educate yourself of how to be smarter with money. And you can do it more quickly if you work with a coach, or I always say, work with a wealth coach, work with an advisor. That should be able to help get you there quicker and avoid some of the mistakes that you might make on your own.
But goals, you would say, are super important. That's definitely something that I talk about and I coach with, setting these goals and writing them down. That's something that you talk about too, right? Putting them down into writing. And then you also talk about in your book, actually creating mechanical ways or automated ways for you to be able to do this, whether that's having a certain amount of money automatically withdrawn from your bank account every month and put into a certain fund where you don't even have to think about it, right? Where there's not even the choice of, well, do I want to buy a new pair of shoes or a new suit, or do I put this in, or do I stay with my consistent investment strategy, where when you take away the negotiating part of it, then it just gets done and you don't have to worry about it.
I agree. I tell a lot of clients when they come in, they want me to look at their budget, and inherently every budget is missing a key component, and the key component is them, right? They're not anywhere on the budget, so they wait till they pay all their bills. They get down to the end of the month and it's like, well, we have $150 to do something with, and maybe that money gets put away for their future. So I always tell people, let's start over, get rid of the budget. Let's start with a spending plan, because everybody loves to spend money, right? Nobody likes a budget. So let's have a spending plan, but the difference is you're going to be the first person in that spending plan.
Mm.
And that you becomes your financial future. That you is going to take care of that short-term, medium-term, and long-term goal that you're talking to me about. So we have to take action. And by making it automatic, my favorite, one of my favorite authors, David Bach, all his books talk about making it automatic. Just what you said, it comes right out of your checking account, or comes right out of your paycheck, goes to the retirement plan, and goes where it needs to go. So, but you're paying yourself first through that spending plan. So you kind of actually feel good about it because you're taking care of yourself first.
And in terms of the goals that you help your clients set up, when we started the conversation, it was, if you focus solely on money, then that's not the healthiest perspective or way of looking at this. In terms of goals, what do those goals actually look like when you're creating them with your clients?
Well, one of the first goals we try and do is make sure that the client has money set aside in the event of emergency. So the first goal really should be, you should have an emergency fund. You probably realized that when COVID hit, the number of people that were living paycheck to paycheck, and hence the government came out and had all of these incentives to kind of forego your rent, forego the mortgage payments. I mean, that was probably a good move because nobody had 3 months or 6 months worth of money set aside. They're living, the majority of Americans, in a really good economy that we had going into 2020. We're still living paycheck to paycheck. So those goals, I try and break them into 3 categories. One is that short-term goal. So you have an emergency fund in case something goes wrong. You lose your job, you get sick. The second is not so short-term assets, where maybe you're saving for that home. Maybe you're saving for the second home. Maybe you're saving for college, for the children. The third bucket of money is really long-term retirement money. And those are so we try and talk about, what is that going to mean for you? If one day you go to retire, how do you want to retire? Do you want to be working until you're 75?
Yeah.
Or if you make these right financial transactions or moves now, you're going to have a different lifestyle when you get to those different points. So we're trying to create independence, trying to create a peace of mind lifestyle. Doesn't mean you're going to be the richest person on your block, but if you got that peace of mind, you're going to be able to get through most of the difficulties that you're going to, come up against in life, and you're going to be comfortable with it. You're going to say, okay, maybe we're not exactly where we want to be, but we are taking care of this, and we do have this in place, and we are moving ahead. It takes time. That's the one thing you learn, becoming independent or financially independent. It just takes time.
Yeah. Yeah. And so in the arena of mindset, I talk a lot about mindset with my coaching, and I've done a lot of research into, accomplishing my own goals of just creating some discipline with my mindset. How would you say that the mindset conversation goes with the clients that you work with? And is it really a mindset shift when you're working with clients with regards to money?
There is. When a client comes in and they really want to make changes, they know that maybe they've been doing 3/4 of everything correctly, and we just want to come in there and try and improve it. Sometimes those improvements is going to take a mindset change. And, I always like the Think and Grow Rich by Napoleon Hill. One of the things he talked about, he felt that even beyond hard work was that you need to develop a positive and an enthusiastic mindset. Because if you don't have a positive mindset about where you want to be and how you're going to get there, a lot of times you're bogged down with perhaps maybe the way you were raised, things you were taught as a child. You may have a poverty mindset. You may have an entitlement mindset. And these can all shift your mind off of where you need to be going. My dad was raised during the Depression years. He had a scarcity mindset. I mean, he didn't throw anything out ever. So different mindsets will challenge you, but it's something you can learn and you can change and modify over time. But it does take time. So any improvement along the way will be a big improvement for you over the long haul.
Yeah. I encourage people to really look at look at it for what it really is. When I hear people talk about things like, when they say things like, "Oh, debt, I don't want to take on any debt. Debt is going to kill me." Like, they literally use words like that, where it's like, okay, let's look at this for what it really is. And what debt is, it's paying additional money for the privilege of being able to purchase something now rather than later. And so if you can afford that, if it works into your budget, then great. If it doesn't, then don't do it. But when we start to involve these emotionally charged words like this debt is killing me, it literally can start to create that negative internal perception that you really are dying, and that you are gonna, like, with the anxiety and the stress that this money conversation has to do. And a lot of people deal with it. And as an actor, when I make money, and then there are long stretches where the money's not coming in, and I literally have to, that anxiety, that stress starts to come up of like, okay, how am I going to pay for this? How am I going to pay rent? How am I going to afford this? And when we don't have the answer to something, that's where the stress comes from. So what I've discovered is that even just having a conversation about it, and then really looking at it for what it is, that it's not going to kill you, that it's just writing down, okay, what are we actually looking at, black and white, and then start coming up with a plan in order to work things out. That's usually the advice that I have not only given myself, but have given other people when dealing with just goals and aspiring towards creating some of the things that they may have not thought were possible. Would you say that's something similar to what the conversation looks like when you're talking to your clients?
Absolutely.
Yeah. It's funny how we were raised can affect our perception on money and what we're willing and not willing to do.
Absolutely. I found there's a very good website out there called Investopedia.com. And a lot of people, you can learn a lot. You can go there and find a lot of interesting financial questions. You mentioned debt. One of the questions I get a lot is, Jay, should I pay my medical student loan back? And I always say it depends what interest rate you're paying and what you can earn elsewhere. So, Investopedia, you could look that question up and it'll tell you the answer. It'll tell you what I would tell you as far as debt. Nobody likes to be in too much debt, but if you're only paying 1 or 2% on that debt, you might want to not be in a hurry to pay that medical loan down. And so anyway, I wanted to share that Investopedia because it's a wealth of knowledge that you can find on that and get some answers to some of your questions.
Yeah. Awesome. Thanks for that, Jay. Next question. What are the 2 best kept secrets to successful investing, would you say?
Well, there's a lot. There's a lot out there. I would say The story of compounding is a money best kept secret. I would say that time is another best kept secret when it comes to money. John Bogle from Vanguard, who started the Vanguard funds, one of his famous quotes was, "It's time in the market, not trying to time the market where you're going to see your best results." So you take a 19-year-old, for example, and a 19-year-old puts $2,000 away for 8 years, and he earns 10% on that.
Mm-hmm.
Another person waits 7 or 8 years to start, and they start at 27 or 28, and they do 2,000 a year. That first young man who saves for 8 years at 10%, he'll have over $1 million at age 65. Hence, the time is so important. Person
Compounding at like what percent?
10%.
10%.
10%. And, most advisors will use 8 to 10. 10 is kind of what the average the S&P has done over the last, 50 or 60 years. So 10% is an okay number if you're just calculating potential for the future. But that other person who waited so many years, that person has to actually keep saving to age 65 to only have about $850,000. So the value of compounding is something people don't think about, but also time of compounding. So if you wait later, you just have to save more to have the same amount if you would start when you were young.
Okay. And as far as some of these newer types of investments out there in the world, like Bitcoin, this kind of stuff, what's your opinion on these newer types of investments? Because a lot of people are getting very rich off of these types of newer investments, and I think a lot of people still are not quite sure what it is. Some people say it's all a house of cards. What's your opinion on this sort of thing?
Well, I believe that in the future there will be more choices to invest in things like crypto, or let's call them country-backed currencies. United States, China. I think Turkey has their own cryptocurrency. I remember when the crypto things first came out, and early on there was some money made, but a lot of people lost money early on. Now we've seen the Bitcoin really take off, but you wouldn't have wanted to be the person that bought it at 55 or 60,000 when it's at 40 or wherever it finished today. Because it actually, what I hear is they say that it's going to be an alternative to the stock market. But yet when the stock market dropped, it dropped along with the stock market. And then you saw maybe gold and silver, another asset class, kind of start to step up. My opinion on it is that if you don't understand it, then maybe stay away from it. I think there'll come many people that got in early. Some are richer. There's probably some that aren't richer, but they're not going to tell you about it. They're not going to brag and tell you, "Hey, I bought Bitcoin at 50,000 when it dropped down to 30." So I tell people, if you understand it, great. Never invest more than what you can afford to lose. So if you had $60,000, if it were my money, I wouldn't go out and buy Bitcoin, or let's say it's 40,000. If I had $40,000 today, I wouldn't go buy Bitcoin today. I'd like to see, a little more. I'd like to see the United States come in with theirs and have them back it up.
And when you say theirs, because as you mentioned, I've seen like El Salvador now has their own Bitcoin, and when you say each country having their own cryptocurrency, you're saying as an alternative to their national currency?
Yes, because I believe that eventually, this is my belief, that eventually paper money is going to go by the wayside. Because it's too easy to be able to not have it taxed. Countries realize that. paper money. You can, there's things that, people can get away from, they're paying cash, so they're not paying tax on it. And I think cryptocurrency would eliminate that because they're going to be able to track every cent and every dollar. I think years down the road, I know a lot of analysts believe that Bitcoin will grow as more people become comfortable with it and understand it. So I try not to, I don't push, those asset classes on my clients. I just try and give them a reasonable outlook of what it is. And I know that there's a lot of cryptocurrencies out there that haven't done as well as some of the ones we see every day. And that's what worries me is, how much are people getting hurt on these little no name because they can go up 300, 400, 5,000% in a short time. But if they can go up that fast, they also can come down pretty fast too.
Yeah. And lastly, it's 2022. We're seeing inflation start to creep its ugly head. What are some financial reminders or investment tips you would recommend for our audience for 2022 and the years ahead?
Well, I would tell you to, invest in what you know. Invest in what you know and invest in what you understand. Educate yourself so that you have a better understanding of what it is you're putting your money into. Don't just take your friend's advice that, let's go buy the cryptocurrency or let's go buy this particular stock. And the other thing I would say to you is, this year, for example, is going to be volatile. Last year was a very low volatile market. And whenever you have one of those years like we did last year with virtually no volatility, history tends to repeat itself. And the following year, there's usually more volatility. So I'm telling people today, be prepared for more volatility. If you're investing for the long term in your 401k, don't shy away. Maybe just revisit your allocation. You'll hear advisors tell you to rebalance. Maybe you rebalance more often now this year because of that volatility. But I also say this, try and stay away from bubbles, asset class bubbles. I'm not saying which ones are out there right now, but I would certainly say just be careful.
And what do you mean by investment class bubbles?
I would say asset class bubbles. For example, I've been looking probably for the last year and a half to find a good deal on a piece of property. They're just very expensive unless you're rehabbing, because I know you do some rehabbing.
Yeah.
I think. That's a different story. But when I go to look for multi-unit buildings, they're priced to perfection right now. And what that means to me is that as interest rates go up, I would say you don't want to pay a premium. Don't pay a premium for a particular asset class. So that's my story on asset classes. Don't chase bubbles. Don't invest more than what you can afford to lose. If you happen to buy a property and you're planning to be there for 10, 12 years, the next couple of years, even if market prices come back a little bit, you're going to be okay because you're planning to stay there for 10, 12 years. Not an impact. But if you're looking to flip homes, unless you're buying them, to rehab, you'll probably pay a premium right now.
Yeah, that's why I've shifted more so towards acquiring rental properties instead of rehabs, because when I first got into the rehab market 7 years ago, you could buy homes here in Chicago for as little as $50,000. $90,000. And now those same properties, that $50,000 property is now $140,000. So, I mean, it definitely, the margins have definitely shrunk and disappeared. So I think that advice is spot on, just to be able to pivot and shift and create an agile way to invest, and definitely consult a professional, someone such as Jay. And Jay, we're approaching the end of the hour here. And as I always like to do, I love to ask my guests their favorite movie recommendations based on these 6 questions here. So are you ready to tell us some of your favorite films?
I am.
All right. Excellent. So the first question is, what is your favorite movie of all time?
Well, there's many. I would say I really enjoyed Usual Suspects with Kevin Spacey. I enjoyed Titanic.
Okay.
Wizards of Wall Street with Leonardo, right? DiCaprio.
Oh, Wolf of Wall Street.
Wolf of Wall Street. Yes.
Yes.
Thank you.
Yeah.
That was very interesting.
Yes.
Hard to believe those things happened, and a crazy time. But I would say I like all the James Bond movies and the Mission Impossible movies with Tom Cruise. I mean, those I love them all. A lot of action.
Given a lot of movies for your favorite movie. You don't have your favorite one of all time?
Well, I'm going to save that for the comedy. I'll save that for the comedy. How's that?
All right. Sounds good. So second question is then, what is your favorite comedy?
My favorite, I'm sorry. Could you repeat that?
What is your favorite comedy?
Comedy. Oh, okay. Well, okay. That would be Caddyshack. I think Caddyshack with Bill Murray, Rodney Dangerfield, Chevy Chase was just one of my favorites. Yeah, one of my favorites. My wife actually bought me what she thought was a golf head cover. That was the gopher.
Yeah.
It really wasn't a head cover. It was the actual gopher, and it does the dance and and the
no way.
Yeah. And I wanted to bring it tonight, but I forgot it. So apologies.
All good.
Yeah.
Great answer. What was your favorite movie growing up as a kid?
Well, we only had 3 channels to watch as a kid. Okay. So, lived out kind of in the country and, the old antenna, there was no cable I'm giving away my age a little bit, but I'm going to say, I love The Wizard of Oz. I never got tired of watching The Wizard of Oz, Judy Garland. That was a favorite as a kid. Always watched that. It always came out around Easter time.
Yeah.
So,
okay.
Yeah.
Yeah. A great movie that reminds you of just aspiring to find the things that are fulfilling in life, and so many great metaphors in that movie, including "There's no place like home."
Yes, absolutely.
Yes. Next question is, what would you say is your movie that you are embarrassed to say you love?
Can I have more than one?
Sure.
Okay. I had to think long and hard about that. Because my wife says, all you want to watch is action movies. But I went back and I kind of remembered some of the movies that I enjoyed watching with my children. And that would be probably How the Grinch Stole Christmas. That's just a classic. And I'm not embarrassed.
Was it the one with Jim Carrey, or is it the older one?
Well, I like the older one. And when Jim Carrey did it, that was really funny. I'm not embarrassed to say I love it. I just think it was just one of those unique movies that you don't think that you love that much until you go back and you see it and you have to watch it over and over again. Another movie like that was Shallow Hal. Do you remember that? The movie Shallow Hal?
Yeah.
It came up this weekend. I was flipping through the channels and it came up on one of the TBS channels. And I couldn't put it down. I had to sit and watch it again. I'm like, it's such a kind of a corny movie, but anyway, I like it just the same.
Yeah, it is a funny movie. Who would you say is your favorite actor or male character?
I really enjoy Clint Eastwood. I've always liked his older Western movies. But his newer movies have really, the ones he's directed have really shows his talent and his capabilities and touching on things that are outside of what you would normally think, that he would be.
Yeah, it's amazing to see. I mean, just watching some of his movies like Dirty Harry and that sort of thing. I mean, how would you ever think to know that in his 80s and even 90s he'd be producing these Academy Award films? I mean, it just goes to show you that if you love something and you just keep learning and growing, you can create, some mastery around whatever it is that you're doing, to the point where, some people I talk to who are interested in acting, they're like, oh, I'm way too old to do that. And I'm like, you're never too old. And you're never too old, I'm sure, to start investing, right? So
correct.
Yeah.
Never too late.
Never too late.
Too late. Yeah.
And lastly, who's your favorite actress or female character?
I would say Meryl Streep. I would have to say she has just been a phenomenal actress over the years, and just every role she plays. I mean, she just plays wonderfully. I mean, whether it's the Deer Hunter or Sophie's Choice, things like that. I mean, she is she's just a very talented actress, and always enjoyed her.
Absolutely love her too. Awesome. Well, Jay, thank you so much for being here tonight. What a pleasure. And it's been great to be able to read your book and do the audio book version. And you have something that you wanted to share with your audience in terms of giving away some free books. Please tell us about that and how people can participate in this free giveaway of some of the books that you're offering.
Okay, great. So all your listeners have to do is just go to jaykemmerer.com. I know they're probably going to show that on the screen, but what I'm going to be doing is I'm going to autograph both the books, 33 Ways. So for the first, I'm going to say for 5 people, thank you, Colin. I'm going to autograph those books and send them to people. It's going to be a random draw. You just have to sign up for it. And then in addition, what I'm going to do is I'm going to give those 5 people a choice I'm going to give away 5 other books. One from Susie Orman, Women and Money. We're going to give another book away, David Bach, The Latte Factor. We're going to give 7, trying to get it right on the screen. There we go. 7 Secrets to Investing Like Warren Buffett. It's one of my favorites. And one of the other people I wrote about in Messages from the Money Masters was a gentleman named Mike Michalowicz, and his book is Get Different Marketing. He's a phenomenal entrepreneur, struck it big when he was very young and ended up losing everything to just bad investment choices. And he's really got a great comeback story for entrepreneurs and people looking to get ahead and trying to continue to recreate themselves. And so we're going to be giving those books away too. So I have some extra free, we'll call them freebies, that are also there on the site. You'll see I have a white paper report, also a 3-minute money fix report that I do it monthly. So they'll be able to continually get some information from us.
Awesome. Well, Jay, thanks again for being here and for offering the opportunity for people out there to reinvent themselves in the conversation of financial investing and financial awareness. Again, if you guys are interested in getting more information, you can visit Jay's website, jaykemmerer.com. And Jay, thanks so much for being here and for your time.
Hey, thank you for hosting and having me, and thank you for agreeing to do the audio book.
Yeah, absolutely.
I can't wait. I can't wait to listen to it.
Yep, it's coming. It's almost done.
All right, good deal.
All right, great. Good to see you, Jay. Thanks for being here.
Thank you again. Appreciate it.
All right, take care. All right, what an amazing guy. Doesn't he just seem like a dad, or like a really sweet grandfather, just offering really good advice? What a great guy. And the offer for him to be able to send you some free books is an opportunity that I would highly recommend you guys take advantage of. And then again, I will be coming out with the audio version of this very soon, so stay tuned for that. And you could also, again, go to, just even checking out different advisors. He did recommend checking out findyourindependengadvisor.com. And the fact that he would recommend even doing that just says something about who he is in terms of being generous with his advice and his insight, and truly is in line with the whole fiduciary mindset of doing what's best for their clients. And then also investopedia.com. So definitely something that you guys can check out. And then again, plenty of insight and knowledge with his books here, which I would definitely recommend checking out. And then again, just with regards to the conversation of money, I think a lot of it has to do with, we definitely stress out and have anxiety in our lives around things in our lives where we are disempowered around. And a lot of it just comes down to educating yourself on just some basic principles so that you can start putting a plan together. And the more that you are able to create some certainty in your life in the areas of finance, investing, and being able to retire, the more you're going to eliminate that anxiety, especially when it comes to retiring. So having goals, Jay talked about, is really important. And just finding out essentially how much money you want to have when you retire, and then work backwards so that you can start actually choosing the age that you want to retire at. And if it looks, if you want to retire earlier, then what does that look like in terms of finding some different investments that may have a larger return? And that's something that Jay can definitely give you advice on. So I would highly recommend reaching out to him. And in regards to the rest of the week, again, it's all about just start getting out of your comfort zone and start educating yourself on some of the things that maybe you wouldn't necessarily look into. And again, the more that you are able to do this, the more you're able to get out of your comfort zone and to start educating yourself on this and surrounding yourself with the right people in your life that you can start learning more from, the better. Again, they say you are the average of the 5 people that you surround yourself with. So really take a conscious look at who you are spending most of your time with, who you are listening to, and maybe think about how you want to elevate that conversation in your life so that you can create more mastery in the areas of financial investing and creating abundance in general around everything else in your life. So that being said, I just want to wish you guys a great rest of your evening. Happy Motivation Monday. Have a great rest of your week, and we will see you guys all very soon. Oh, by the way, we have tickets still available for our Inspire event here in Chicago on April 23rd. And you can check tickets out there at my on my Instagram and my little drop down in my Linktree bio there. And then also Rama Drama, which we are doing in Palm Beach, Florida on June 24th, 25th, and 26th, where you have the opportunity to meet a lot of your favorite actors from your favorite movies and TV shows from Lifetime and Hallmark and GAC. And it is going to be an amazing, awesome, incredible weekend. So would love to see you guys at both of these events. Again, we've got the Inspire in-person event for the first time ever on April 23rd. And then Rama Drama, which you can go to ramadrama.com and see who are the actors that are going to be there. And can't wait to see you guys all there, where we get to hang out, take some pictures, and you'll be able to participate in some really fun events and activities. So have a great rest of your week, and we'll see you guys all very soon. Take care.